Hello, Namaskar viewers. I am Sanjeev Pandya welcoming you to another edition of the Business Talk with AJ right here on ITV Gold. This weekly show, the Business Talk with AJ, brings you all the latest that you need to know from the world of business from US as well as from all over the world. And we bring you this update, of course, courtesy of Sai CPS Services, a full-fledged accounting firm in the business for over 25 years, and they can help you with all kinds of tax matters, personal or corporate tax matters, as well as bookkeeping, payroll services, and also they guide you where to invest the money before the year ends. So this is the right time for you to contact Sai CPS Services to find out where you can put extra money in a 401k or any profit sharing plan in order to save money on the taxes. And the most important thing is Sai CPS Services, they do taxes right for their clients, and that's why they happen to be their clients' favorite. Sai CPS Services, with multiple locations in state of New Jersey, can be reached at 908-380-6876, or you can visit their website, saicpsservices.com. With that note, I'd like to welcome Mr. AJ Kumar of Sai CPS Services. Sir, good to see you. How are you?
I'm doing great, Sanjeevji. Thank you.
Ready? So here we are in month of December.
Absolutely. Last month, it was so fast. 2022 is almost over now.
Yes, December to remember.
December
That's
to
what
remember.
they say. So now this is the month where a lot of things going to be taking place, because all these last 11 months of जो भी कहते हैं ना हिसाब किताब जो होता है वो बिल्कुल ठीक ठाक करना होता है.
Absolutely.
In order to make sure that when you file your tax return next year for the 2022, everything is in order. So this is the busy time for you as you advise your clients.
Absolutely.
Where to invest the money, where to put money in order to save taxes. Now, as we go further, we'll definitely talk about that, whether investing in the stocks is a good idea or not, or where to do it, that we're going to talk about. But first of all, let's talk about one of the major headlines in the news nowadays is the economic downturn. All these pundits and experts in the world of business are saying that definitely there is going to be a downturn. There's going to be mild recession, and that will be happening. We have heard from most of the people, and now there is a comment coming from the founder of Amazon, Jeff Bezos.
Absolutely, Sanjeevji. Rightly said. So Jeff Bezos, in an exclusive interview, said for the viewers, the things are difficult in the coming days. They're expecting a recession, if not a complete recession, probably a soft recession. We heard the same news, similar news from Elon Musk last week, that the coming days there wouldn't be much buying. Supply will be there, but there wouldn't be many people who can afford to buy large ticket items. So for our viewers, if you have a large ticket item that you need to purchase, hold on to it. Unless it's mandatory, don't spend the money. Hold on to your cash for next 3 to 6 months. Things are going to get cheaper. Even if you need to buy it, you can buy it next month. If you remember, on Thanksgiving, we did not really see the kind of sales that we used to see this time. We are expecting bigger sales in January this year as opposed to in November or October that you have seen in the past. So hold on to the cash if you can.
Absolutely. And like I said, all these major pundits and CEOs are predicting there's going to be a downturn. So let's take it one day at a time and see what happens. After Thanksgiving holiday, it's always a thing that stock market would do well. But unfortunately, just a couple of days ago, Dow Jones took a major hit. But before that, Dow Jones had added a couple of hundred points. But then there was all of a sudden, there was a big slowdown.
Absolutely. So if you take the news day by day, this Thanksgiving, the sales were higher than the year prior. This year, we saw 9.12 billion worth of online sale on Thanksgiving, Black Friday, during this time of the week, during this time of the year. These sales are 2.2% higher than the prior year. So if you think about it, this is a great news. This is good news. People were expecting, a lot of pundits were expecting the sales to go down, which it did not. And that created a positivity, and the stock market went up the right next day after the holidays. After the Black Friday, we see the stock market is going up suddenly. But then on Friday, when we had the job news, the jobs are not available. A lot of people are laying off. Every major company is laying off the jobs. This creates fear. So every Friday when the job news comes, the market typically takes a dive. So we see in total, one day the market is up, one day the market is down. So the market is fluctuating. So it's not a market for a normal person who does not understand the market to get into the market. This is not the time to be taking risk. For a normal investor,
Yes.
or somebody who does not understand the market, Sanjeev ji, it may not be worth for them to be investing money at this point of time.
Okay, so talk about investing money quickly. I just want to, let our viewers know that if someone contacts Science CPS Services, and if they, if they are at a situation where they should invest some money, maybe add some more money into 401k plan than what they have added or something, where would you advise them to invest?
Well, it highly depends on the situation to situation, Sanjeev.
But generally
there is
speaking.
Unfortunately, there is no general answer. But at a high level, if you see, look at it step by step. We are already telling you don't go in the stock market.
Correct.
You know the gold prices are not changing. The
Yes.
gold price is supposed to be fixed, flat, more or less, does not fluctuate as much. So knowing that, and gold does not give you any return, it's supposed to be sort of quote unquote dead asset. You buy it and you leave it, you can't really take the interest out of it. So we are not advising to buy gold, dead asset. We are not advising to buy stocks. Then the question is, what should we be doing with the money?
Correct.
When the house prices are so high, when the mortgage rate is so high, what do we do? Well, think about it. When the market goes down, when the interest rate goes up, what goes up? The fixed rate CD. The bond market is doing well. The fixed rate, banks are offering as much as 5% return. In this country, interest rates are supposed to be 0.1, 0.2, 0.3%.
Yes.
Now there are a lot of banks who will give you 4%, 4.5%, 5% on certain CDs, depending on the number of years. So it may not be a bad idea for you to park your money temporarily into a safe fixed return asset, certificate of deposit, fixed deposit type of asset, where you can count on getting certain amount of money guaranteed without sacrificing the principal.
All right, so that is the one piece of advice. I just wanted to let our viewers know, and that's what Science CPS Service is all about, that they can really go deep and further once they evaluate your personal financial situation and the tax consequences, and they can advise you further. Anyway, moving on to it. Now, Ajay ji, you just said that obviously stock market is not doing too well. Many companies are laying off the people and so on and so forth. But Black Friday sale ended, and this was a record-breaking sale. That means people are still buying a lot of stuff.
Well, you're right. And it's all about statistics. And the way you define statistics is you define the result you want to achieve and you find the statistics to support the result. Meaning, a lot of people are saying year over year sales were 2.2%, 2.3% higher than the last year. But they forget to add the inflation is 8% higher. So if things are, when you are talking about the dollar amount, they should have had 8% increase to be equal to the last year. So when we are saying 2.2% increase, is it really an increase or is it going down? So what we are saying is the market is uncertain. Everybody's situation is different. On a TV show when millions of people are watching ITV Gold, it's hard to give a specific advice for everybody.
Correct.
What we are telling you is the stock market is fluctuating. Stock market is uncertain. Dollar price are fluctuating and may or may not be favorable to you. We saw dollar prices going up to 84 rupees. Now the dollar prices are low 81. In next 30 days, the dollar prices are going to remain in this range. And then we are expecting 30 to 90 days forecast that dollar prices will be around 84 again. So when you have so much uncertainty, you don't want to be laying the cash out. And you're thinking about recession, you want to hold on to your cash. You want to save, you want to preserve the cash.
So even though holiday shopping sales was record high, 9-point-something billion dollars, right? Obviously, inflation takes a toll on it.
Absolutely.
While the inflation is around 8%, economy grew 2.9% in the last quarter. That's a very modest gain, but that's where it grew. And now for economy to grow a little further, let's see what happens. And that's why I think Fed has announced that they might be raising interest rate one more time in order to control inflation.
You're 100% right. That's the plan all along was, but knowing there is some positivity, knowing the mortgage rates are going down continuously third week, knowing the sales were better than what we expected, now Fed is having dual mind. Fed may not increase the rate in December, may wait till January to see if they are going to increase the rate or not. We were expecting a definite one more time rate increase, but it may be delayed. It may not happen as soon as we expected.
I was going to say that a couple of weeks ago we discussed, the same matter, and I said that it would be better if they don't increase the rate in the month of December.
You're 100%
because
right.
it would send a very negative impact just in time for holidays. Right now, everybody's in a holiday mood. Let them be in a holiday mood. Let economy roll however it wants to roll. Come January, look at the situation, and should you need to, raise interest rate, that's when you should do that. So that is the thing. So all right. So as we have covered inflation, economy, and the Black Friday record sales and everything else. Now let's go to one thing which is hitting very hard. You just never know. When you wake up in the morning, which company is announcing layoff for their employees. DoorDash has announced that they are laying off 1,250 employees.
Absolutely. And it's a chain of event. When one company announces, every company start looking at their books, start looking at their situation. Now, 1,250 may not sound too high, but these are the corporate jobs.
Yeah.
They are not the people who are delivering the food. They are the corporate jobs. That makes it worse. 1,250 represents a large number for DoorDash.
True.
We heard the similar news last week for Intel, the chip maker. They are coming up with a plan to downgrade their workforce substantially. We have heard the same news from Facebook. We have heard the same news from Twitter. We have heard the same news from Microsoft. So it's a trend that's going on. It's going to affect a lot of people, a lot of high income earners, mostly in the IT sector. A lot of these jobs are not blue collar job. A lot of these jobs are white collar jobs that are going away. The corporate executive IT consulting type of jobs are going away, and it's going to affect more so the West Coast, Sanjeevji, as opposed to the East
Silicon
Coast.
Valley. That's what they call Silicon Valley area, and that's what they very hot and heavy tech market. With that note, here's the information that you need to know. DoorDash joins the ranks of Amazon and Twitter and Facebook and HP and the Lyft, imposing job cuts. But here, DoorDash will offer 17 weeks of severance pay to the employees that they are laying off, and healthcare will continue till March of 2023. So that is what's happening now.
That's a good news. If you think about it, it's a lesson for Twitter, for companies that just fired employees over an email or over a phone call without giving them any compensation.
Correct.
DoorDash is giving 17 weeks of compensation. So that's a great news.
And talk about Twitter and Elon Musk. Before we go into the break, I just want to add one thing. Ever since Elon Musk took control of Twitter, it's been already negative news and negative publicity and everything else. The way he has treated his employees, the way he has let go his employees, and the way he is, he's being a dictator at Twitter, and that is obviously not sending a good sign among the advertisers. And more than half of them have walked away, right?
You are 100% right. Think about it. Misinformation. If you can just pay $8 to pretend to be anybody in the world, and it costs you $8 a month, so it creates misinformation. And bringing back Trump on Twitter, you never know where the hate speeches are going to go. So it's not good advertising for a lot of business. So last news we saw that Twitter advertising is down as much as 50%, millions of dollars, and Twitter. Elon Musk is saying we may have to file the bankruptcy if it goes this far.
He is saying it so easily after buying Twitter for $44 billion. He's saying it so easily that I may have to file bankruptcy. I mean,
you're right, but bankruptcy is typically not zeroing the value.
I know that, but I'm just saying.
It's Chapter 11 for that.
But you can't talk about that when you're actually trying to bring customers in, you're trying to charge them, and you're asking advertisers to stay with Twitter, right?
Right. You want to show the positivity. You want to show the strength as opposed to talking about the negativity or the bankruptcy. You're 100% right.
All I can say, Elon Musk may be a very, very smart engineer, but not a smart boss. With that note, we're going to take a break. You're watching the Business Talk with AJ. When we come back, of course, we're going to start with what's happening in China and how it could threaten the U.S. economy. That's a major news. That's all coming up right after this messages. Please don't go anywhere. Welcome back to the second half of the Business Talk with AJ show right here on ITV Gold. You can always find us right here on your favorite TV channel at this time. And in case if you have just found us for the very first time, we'd like to welcome you to the large viewership of the Business Talk with AJ right here on ITV Gold, where we talk about business. Our businesses talk about the business, and your business should be listened to our show, The Business Talk with AJ, courtesy of Science CPS Services. How about that?
That's wonderful. News that you can use. There's so much news in the market.
Yes.
We analyze the news for you. We bring the news to you and we help you understand so you can use that news.
Correct. That's why I say our business is to talk about business. Your business is to watch our show, The Business
Absolutely.
Talk with AJ. All right, let's talk about business. Between India and USA, currency rate.
Absolutely. So the currency rates are staying around 81 rupees for next 30 days. For next 2 to 4 weeks, we are expecting the currency rates to remain under 82, around 81 rupees per US dollars. In next 30 to 90 days, our forecast is the currency rate to go up as much as 84 rupees. So if you have to send money, send it sooner now or wait for 30 days to send your money. Then you can have more rupees from your US dollars.
Okay, so eventually rate is going to go down a little bit after a month.
Absolutely. So right now we are expecting the rate to go down, cool down slightly. Next 30 days, the rate is going to be around 81, low 81s. But after 30 days, in early next year, we are expecting the rate to be going up at 284 and then coming down and settling at around 82 or 82.5 somewhere.
Okay, so that's good to know. Gold prices.
Gold prices are staying similar. When the US dollar rate goes down, the gold price slightly go up. It's a dead asset. It does not produce any cash flow. That's why a lot of people are not investing into gold price. And that's why the gold price is not increasing as much as it should have increased. We have seen the gold price to be around 1750, 1749 this week. The gold prices are going to remain in that range, probably will go down slightly. So we are forecasting the gold price to remain between 1700 to 1750 in next 6 months to next 9 months.
I tell you, a lot of our South Asians buying a lot of gold.
Absolutely.
Diwali was busy, Thanksgiving weekend was busy,
And that's more
every
for
single
the
jewelry store.
emotional reason. That's more from the jewelry part of it, not the investing part of it.
Yes.
A lot of us, a lot of Indian ethnic community buys gold because they like to buy gold, not as an investment, not as an asset.
No, they like to buy gold because wedding season is going to be starting in January.
Absolutely.
So that's why they need it. Anyway, let's move on to now very, very serious story. As I mentioned before the break, that what's happening in China could really, really threaten the US economy. That may be a very long shot to say that, but it could happen. What's happening in China, AJ, is that because of their very, very strict COVID policy, the citizens of China, they're very upset. There are 4 cities, including major cities, Beijing and Shanghai and the other cities, right? They are having a severe COVID lockdown, and Chinese Premier Xi Jinping's government has put in some very, very strict COVID restrictions. People are tired. What happened? This incident happened in one of the cities where the apartment building caught a fire, and about 8 to 10 people died. And the rescue people could not get there on time because of COVID rescue. So people got very much upset, and their point was that had there been little ease down on the COVID restrictions, rescue people would have been able to go there a little sooner, a little faster, and perhaps could have saved some lives. So they are protesting in the cities. They are coming out. They are coming out with a white piece of paper on a hand, so that way police do not arrest them, do not take them into custody, and they are saying it's a peaceful protest. Now in China, to protest against the government, it's not easy because government pick you up from wherever you are and put you behind the bars. So many people are hiding their faces, and they are still coming out. And they're frustrated because they've been locked down in their houses for such a long time. They can't even go out to buy groceries and everything, and they're fed up. But on the other hand, the COVID cases have risen so much in China. Now, how the economy comes in effect, because of course the trade and the business and everything, shipment coming from China takes a long time to come. Whether they will come or not, we don't even know. And obviously it hurts US because US imports a lot of stuff from China, and one such item is iPhone.
Absolutely, Sanjeevji. So China has a zero tolerance policy. What it means is if one person has COVID, the whole office is being closed.
And if one family has COVID, entire building gets shut down.
That's right. So it creates a lot of pressure on the manufacturing facilities. A lot of manufacturing facilities are closed. On an average, China is supplying 1/3 of the iPhone, as you wrote it, than what they used to supply during this time of the year. Now consider 1/3 of the supply for any item will create a lot of pressure on the purchasing. So if you are one of those viewers who intend to buy iPhone, hold on to it. Just don't buy it for another month. You can get a better deal around Christmas or in January, New Year, as opposed to trying to buy it now. Just because there is not enough supply coming in, a lot of these dealers are not going to give the same discount or same deals that they used to offer. And it's not just with the iPhone. A lot of other manufacturing is done in China. You like it or not, manufacturing hub have all shifted to outside US.
Yes,
a lot of them are in China. Yeah. And China's manufacturing have taken a dive because of this zero tolerance policy for COVID. So a lot of our demand is going to remain unfulfilled. So it will be a good idea for you to wait, for one more reason for you to hold on to your cash and not spend it, preserve the cash for as long as you can.
All right. One thing you said, good idea to wait. Okay, let's see how good idea is this for you to wait. We've been talking about mortgage rates going up, and up since last couple of weeks. But now there has been a little bit downturn in the mortgage rates. Mortgage rates are coming down. They have come down. You could get for conventional mortgage around 6%, which is not bad. FHA loans could be a little less than a 6% if you have a good credit and excellent income. My point is that mortgage rates have started to come down a little bit because it was just too much last month or two because rates were high, and now they are saying about 40% down in a purchase price than last year. But AJ, in my opinion, I don't think you should compare last year's with this year because last year was an exception year.
Absolutely. I think there are two different situations.
Correct.
Last year or early this year when we were able to get the mortgage rate at 2%, 2.5%, 3%, we have seen 2.7%, 2.8% yes. Conventional loan. Now the rates are getting better, but expecting or comparing them with the last year or comparing them with the earlier this year may not be fair.
Yep.
But right now you need to think about it. This is a situation when you ask yourself if I should be locking the rate or not. We have seen the rates to go up every week, and now for last 3 weeks the rates have been coming down slowly, especially if Fed does not increase the rate in December. Then we expect the rate to remain around this number, maybe slightly lower till the end of the year. But if Fed is to increase the rate, then mortgage rates are going to jump back again.
I'll tell you, how serious this matter is that for the very first time in history, the federal government, one of their agencies called the Federal Housing Finance Agency, is known as FHFA. They said that they will back mortgages of more than $1 million. Before they weren't. But they want to, I guess they want to help the buyers who are willing to buy, who can purchase this high price homes and properties, and federal government is going to back them up.
Absolutely, and I'll be amiss if I don't mention this to our viewers. If you are taking a loan for more than $1 million, you don't get tax advantage for the interest that you pay over $1 million. Let's say if your loan is $2 million, for a primary home, you only get the tax benefit of the 50% of the interest that you are paying. You don't get the tax benefit for paying the interest on the whole loan. It's only allowed up to $1 million.
There you go. Okay, that's interesting. But, just wanted to, add some facts in here. Obviously, maximum size of home mortgage loans eligible for backing by Fannie Mae and Freddie Mac. These are government agencies. They back up all the U.S. mortgages, right? Will jump to 1.089 million next year in high-cost markets. In most other markets, the maximum size of mortgage eligible for backing will be 726,000 in 2023. So
Which is way higher than what it used to
correct.
be. Absolutely.
An increase of 12%.
Yep.
From current limits. So, you're right on the dot. It's a way higher, but they have to, because obviously housing, prices are getting expensive, and they want people to buy right now. Okay, the rates are a bit high, as you can see. You can always refinance after 2-3 years, because eventually rates going to come down. This is not going to stay, forever as we go along. All right. As we also know, the Fed's inflation rate also cooled down in October a little bit. So that is a good sign.
That's right.
But I think the most important report when it comes out, job report this week, and what actually comes out in January, the fourth quarter results,
That's
it
right.
will really determine which way
Absolutely. That
the
will be
economy is going.
determining factor for
Yes.
Fed to decide if they want to be increasing the rate again or not.
All right. So now, having talked about everything, how can we not talk about crypto bank currencies right here in our show? And that has been in the news since last couple of weeks, thanks to FTX. And of course, the founder of it, Sam Bankman-Fried, known as SBF. So here is the crypto bank, BlockFi, right?
Absolutely. So FTX had invested, if you remember in our last
Yes.
week's news we covered, that they had invested $400 million. Now FTX cannot fulfill their lender's obligation. FTX is considering filing Chapter 11, bankruptcy, reorganization of debt, and is pushing the whole cryptocurrency market way down. Bitcoin is down by 61% down compared to the highest once it was. So it's a scary news, especially when you're thinking about Bitcoin. It's not gold. It's not a tangible asset. It's not something that you can touch. It's not currency we are talking about. It's a hypothetical virtual asset that you don't have. And you invest millions of dollars. And then you lose 60% of it. Then you start thinking, is it the right thing to do or not?
Hey, listen, people like to live in that dream world, and perception is the key. So they just like to assume, percept, and they like to see money grow on a piece of paper.
Everybody wants easy money. But,
Yes.
but my advice to our viewers is, do it the hard way. When you do it the hard way, you don't lose the money.
All right. Do it the hard way, and that's exactly what I think India is perhaps doing, because according to all these major research firms, they are saying that India's economy likely to grow 6.5 to 7% next
Absolutely.
fiscal year. My point is that even if it goes to 5 or 5.5%, it's still a good news.
It's a great news, but it's all about perception. So India's economy was supposed to increase by 7%. And when the new data showed up that it could be 6.5 or slightly lower than 7, a lot of economists, a lot of investors were not happy. A lot of investors, a lot of economic news, a lot of banks were downgrading the India's country's total financial status. But 6.5% in this type of market, when everybody is
Like I say, even if it's between 5.5 and 6%,
I
it's still a
think
good
great.
news. It
I
will be a
think
record
it's
year.
still a very good news.
All
for
right.
India.
In the end, talk about record years. We are talking about records, and of course, this is the cricket news. And as we go into the taping of the show, what comes out at the end, we'll see about this cricket test match. England cricket team is visiting Pakistan after 17 years, right? And this is a story. First test match on a first day in Rawalpindi. Pakistan scored 566 runs in one day. First day, a loss of 4 wickets.
That is against
All 4
Pakistan.
batsmen hit centuries.
That is against Pakistan, in Pakistan.
Yes.
4 batsmen hitting century
Yes.
on the first day, making more than 500 runs. That has never been made. The last record was in
1910.
1910.
There was a last record, and Australia's 494 runs against South Africa in 1910. So England has broken that record, and that's a record-breaking thing. And we are so happy to bring you all that story right here in the record-breaking show, which is called the Business Talk with AJ. AJ, thank you so very much.
Absolutely, my
All right.
pleasure.
Once again, make a note of Science CPS Services, the accounting firm number, and keep that number handy. You're going to need it anytime. 908-380-6876. I am Sanjeev Pandya. Until we meet again, same place, same time, I wish you happy and smiley days ahead. So long.
Thank you.